Hi there, welcome to the Introduction to Forex video. We're going to learn what is Forex, we're going to cover some of the buying and selling terms that you're going to come across, and we're going to look at the common currencies traded, including their ISO codes. Forex is an acronym. It's short for foreign exchange. What we do is we buy one country's currency with another country's currency, and we profit on the small changes in the exchange rate. Now, like anything else, money is limited. There's only so much of it out there. And as money is bought up, more people are buying money, less of it becomes available. So that little bit that is remaining becomes worth more. Now, conversely, as people are selling money, more and more of that country's money becomes available. So the supply and demand shifts. Now there's little demand and more supply, it becomes less. This is how Forex trading works. We'll be using charts to analyze the markets. There's no guessing, there's no gambling. We'll be using a trading system to determine where we can buy and sell. And yes, we can buy and sell. Selling in the Forex market is not penalized. There is no restraints or no restrictions to selling. As you might know, in the stock market, selling is called short selling, and there are limitations to what you can do. In the Forex market, it is buying and selling, both are equal. We're going to take a look at some of the buying and selling terms that we're going to come across. Buying is when the market's going up. Now, there are other terms for when the market rises. If you're buying into the market, it means you are taking a position and you would like the market to rise, to go up. You're a buyer, you're buying, you're going to buy. Another term is long. If you're long the market or you're going long, it means you're getting into a position where you want the market to rise. Another term is bull or bullish. If you're bullish, the Euro USD, for example, means you would like that chart to climb. You would like it to go up. It's a bull market, means the market is rising. And finally, the last term is rally. If the market's rallying, it is rising, it's climbing. Now, the opposite, a market going down, would be selling. If you're a seller, you're taking a position and wanting the market to go down. If you are short the market, means you want it to go down as well. Another term is bear or bearish. If the market is bearish, it means it's falling. The market could be taking a momentary dip, which means, again, that it's going down. These are some of the terms you're going to come across. Now, there is a neat story between the terms long and short. Back in the day, when trading stocks, the only way you could make money was to buy. Market would climb, the value would rise, and then you'd have to sell at a higher price than you bought. Now, generally, what happened was when you bought into the market, it took a very long time for that market to rise. And when something bad happened, it took a very short time for that market to fall. So long going up, it took a long time for the market to climb, but then when a disaster happened, it took a very short time for that market to fall. And bull and bear, why these two animals? The bull has a unique striking methodology. When a bull strikes, it lowers its head and then raises it sharply. That's the attack. And conversely, with a bear, when a bear attacks, it raises its hand up high and then strikes downwards. So that's where these two animals come from as far as the bull and the bear goes in the market. The most common currencies traded and their ISO codes. ISO stands for International Organization for Standardization. Now, every country has a currency, and every currency has an ISO code, and it's a 3-letter code that identifies that currency. And in Forex trading, we use these ISO codes all the time, so it's good to get familiar with them. So here are the 8 most commonly traded currencies, starting with the euro, the Eurozone euro, the Great Britain pound, the Australian dollar, the New Zealand dollar, the United States dollar, the Canadian dollar, the Swiss franc, and the Japanese yen. These are the top 8 most commonly traded currencies. Now in Forex, there are many other currencies, but these are the ones that are traded by 95% of everybody that trades currencies. The ISO codes for the euro is EUR, for Great Britain pound is GBP, for the Australian dollar AUD, New Zealand dollar NZD, and the United States dollar's ISO code is USD, the Canadian dollar CAD, Swiss franc CHF, and finally the Japanese yen is JPY. That is it for this short video. Thanks for watching, and we'll see you in the next video.